Well, thank you, David. I appreciate that. Certainly, the palladium market is quite a fascinating one, especially with what's going on in the world where now we have unlimited quantitative easing out of the Fed. A lot of money is flying out there very quickly. And I think what you saw in Palladium, here's the chart today. You see it's trading, let's call the midpoint 2100, 2150, down a bit today. Although for those who may be a little bit newer to Palladium, it's had quite a rally over recent years. Here's a chart from 1992 to the present. You see it was around $100 back in the 90s, then had that spike up during the dot-com bubble, then comes back down, then had been around $400 to $600 an ounce before really in the last couple of years accelerating. You can see that's gone quite vertical. We'll take a quick look inside that. There you can see 2018 was $1,100, went down, finished the year higher. And then 2019 was really a big year, started at 1,300, escalated all the way up to 1,900. And earlier in 2020, we saw that rally continue, just continuing up. Looks like they marketed 2,800 here before getting sold off pretty thoroughly with everything else over the coronavirus sell-off in the last couple of weeks. Although what's interesting is that you see, let's say if we look from February and March, sold off quite a bit down to 1,500, although back up to over 2,000. So certainly a volatile road. And I think what has happened here is that a lot of these metals, you have structural deficits and a lot of levered paper out there. This is something that I dig into quite a bit in the silver market, but certainly has happened in palladium. Keep in mind that with those recent Department of Justice confessions from some of the bankers that trade in the precious metals markets, one of them did include confessions of manipulation in the palladium market. And essentially what happens is that things get a little out of skew because they're traded in paper. So you can have physical demand, or rather contract demand, on the COMEX, which is the price we're looking at in these kit code charts. But let's say the Fed launches, for example, unlimited quantitative easing, and you would think that the price of precious metals would rise in that situation, yet obviously we've seen that not happen many times. And that is, again, because you can sell, or not you, but a lot of the banks can sell as much paper, gold, silver, or platinum, or palladium as they want. So you've created a situation where the metal, in many of these cases, just isn't there. That appeared to be what was happening as there were actual physical shortages in the market over, especially this last, really look from 1,400 in August of 2019, actually is double to the 2,800 it was at earlier. Again, dipped down, but then rebounded. A lot of people were wondering if that would be what would trigger a similar situation in gold and silver. Again, I study silver most particularly, where the estimates I hear is for every ounce of physical metal, there are up to 500 people who think they own that in some paper form, whether that's COMEX contracts or EFPs or a whole variety of other technical gold and silver and platinum, palladium paper products, where you have this same concept you've heard so much about in recent years of hypothecation and rehypothecation, which, perhaps to boil it down simply, just imagine multiple claims on the same ounce of metal. So here we have the commitment of traders report for palladium. And basically what this shows you is a snapshot, and this red line in particular here shows you whether the commercial banks are long or short. So you can see back here in that same time period, we looked at August of 2018, or 19 rather, yes. No, this would be 2000,
Okay, so here in August of 2018, you can see this red line, and if you look up at that yellow box, you see COT, DLC, and a C around it, 5 up from the bottom, negative 3,236 contracts. So that's the amount of contracts the commercial banks were short here. And now if you're looking at that same C field, negative 15,000, negative 14,000. Here they're going to get a little bit or less short. But you see, as the banks were getting short, the price is rising as they continue to get short. Then right here, as they've been covering, interestingly, you've seen the price drop quite a bit. This is a pattern that we see again in many of these metals where if you just look at when the banks were long or short, you have a good idea into what's going on. And again, especially now, an interesting environment where, yes, you would expect industrial demand to drop quite a bit with what's happening with the corona. But the other part of it is that there is that precious metals component of palladium. And when you have the Fed printing over $500 billion a week, you know, people are going to be rushing to these metals. We've seen liquidity warnings issued by the London Bullion Market Association in recent weeks, similar with the CME and the COMEX. So basically what you had happening was people were wondering if we had reached that point where the metal just wasn't there, because you can write all the paper you want, but when we're talking about a physical product here that's actually going and used in industry, we saw the lease rates spiking, which means that people were not willing to lend metal. People wanted physical metal, and that's what was driving that. Obviously, things had a bit of a detour along with Corona, where the whole market sold off. But interesting to see that a good chunk of that has already rebounded. Again, let's see if we look at January, the price was around $2,000 an ounce. So palladium basically back where it started the year, which again, as you can see from this chart, is still doubled. Again, here is last August of 2019. So all these things with the markets, there's the individual aspects that are happening with the individual commodities, in this case, palladium. But when you have sell-offs in the broader market, or obviously things like the coronavirus, where you've seen everything get sold off, that plays in too. But certainly will be interesting to see what happens with the precious metals imbalance that the world is currently experiencing now, which really in the last month, bullion dealers have seen record sales of physical gold and silver. A lot of the mines have gotten shut down. In fact, Mexico last week announced they were shutting down anything non-essential, which included mining. Seems like they've been going back and forth on that, but you have a lot of mines getting shut down around the world, which is hurting supply and has really been pressuring this fractional reserve system, which is how things are traded on the COMEX and the LBMA. So certainly a lot of people in the precious metals world very interested to see how that plays out. If that leads to some sort of short squeeze or failure to deliver, in that case, you would likely see all of these metals spike quite considerably. But again, what's driving all of this? And again, you see palladium was rising even before the Federal Reserve resorted to unlimited quantitative easing. You know, if we reach a point in the near future where the coronavirus settles down, especially with all the money that's being printed around the globe, it will be interesting to see if we resume this vertical rise up. Last thing I would like to point out here, you see how the palladium price has basically gone vertical. And normally in a stable environment, you would think, all right, why is this going vertical? But something to keep in mind, here's the US debt chart. This is from 1972, where the debt chart has gone vertical. And of course, here is the Fed's balance sheet. You see, back in September of 2008 was about 800 billion. It never really was reduced as the Fed liked to promote the appearance of happening. You see it got up to 4.5 trillion, came down a little bit in the last couple of years, and then has just gone exponential. So again, something to keep in mind when you're looking at the prices of any of these metals. Just imagine gold, silver, or platinum in a simple way, just as a piece of metal. And if you double the money supply, then, you know, if nothing else changed, you would expect the price of the metal to double in a theoretical world. So there is a reason that these prices are going up. We'll see how it plays out, but certainly a fascinating situation and some things to consider in the palladium market.